You're about to see something most sellers still don't understand. 83% of home sellers right now believe they'll get their asking price or even higher. But last year, nearly 90% of homes had to cut their price just to sell. So one side is confident, the other side is reality. And that gap is exactly what's breaking the 2026 housing market. Because right now, homes are sitting longer, buyers are pulling back, and the spring housing season, the most important time of the year, is already showing signs of failure. And there's one major shift happening behind the scenes that most people haven't noticed yet. But once you see it, you can't unsee it. Sellers are still in denial. Right now, there is a massive disconnect in the housing market. On one side, you have the data. On the other, you have what sellers believe. And those two things are not lining up. 83% of sellers say they expect to get their asking price or even higher. At first glance, that might sound reasonable, but when you actually look at how real estate transactions work, that number starts to look completely unrealistic. Because in reality, almost nobody pays full price. Yes, bidding wars do happen. Yes, some homes still sell above asking, but those are the exceptions, not the rule. In fact, just last year, around 90% of listings had to cut their price at least once before selling. Think about that for a second. 9 out of 10 homes were initially priced too high and had to come back down to reality. So when 83% of sellers today say they expect to hit their price or higher, what that really tells you is this: most sellers still haven't adjusted to the new market. And it gets even more interesting. Only 12% of sellers believe they'll have to sell below asking price, and less than 5% say they're unsure. That means the overwhelming majority of sellers still believe they're in a strong position. They still believe this is a seller's market. But when you actually look at the data across the country, only about a quarter of major markets are still true sellers' markets. So what does that mean?
It means sellers are still mentally living in the past. They're anchored to a version of the market that doesn't exist anymore. Back in 2021 and 2022, this mindset made sense. Homes were flying off the market. Buyers were overpaying. Inventory was extremely tight. But today, inventory is rising. Homes are sitting longer, and price cuts are becoming the norm, not the exception. And yet, despite all of that, seller expectations are still lagging behind reality. Now, to be fair, this gap is starting to close. Some sellers are beginning to notice what's happening. They're seeing homes sit. They're seeing price reductions everywhere. But for a large portion of the market, the wake-up call hasn't fully hit yet. And that's exactly where the problem begins. Because in this kind of market, pricing your home wrong from the start can cost you everything. But here's where things start to shift.
Reality is starting to hit. Even though many sellers are still in denial, cracks are starting to show. Right now, about 40% of sellers say they expect to cut their price or offer concessions. That's up from just 30% this time last year. That might not sound huge at first, but in housing terms, that's a big jump. Because what it really means is this: more sellers are starting to accept that the old strategy isn't working anymore. They're beginning to realize that pricing high and waiting for the right buyer doesn't work in this market. And you can see that shift in behavior. About 54% of sellers are now actively researching prices in their area. Roughly half are making repairs, cleaning, and preparing their homes more carefully, and nearly 44% are identifying upgrades before even listing. That's a very different mindset compared to a couple of years ago. Back then, you didn't need to try this hard. You could list almost anything and it would sell. But today, presentation matters, pricing matters, timing matters, and most importantly, those first few weeks on the market matter more than ever. Because in this market, if your home doesn't get attention right away, buyers start to assume something is wrong. And once that perception sets in, it becomes very hard to recover. This is why more sellers are trying to price their homes more realistically from the start. And that's actually one of the reasons why many of them still feel confident, because in their mind, I'm pricing it right this time. And to be fair, that's partially true. Some sellers are getting closer to market reality. But here's the problem. They're still not close enough. Because even though 40% expect to cut their price, the actual number will likely be much higher, just like last year. And that's where the real tension in the market comes from. You have sellers slowly adjusting, but not fast enough. And that gap between expectation and reality is what causes listings to sit, prices to drop, and momentum to disappear. Because the longer a home sits unsold, the weaker the seller's position becomes, and buyers know that. And this is where everything flips.
Buyers now have the power. For the first time in years, buyers are no longer on the back foot. In fact, you could argue that today, buyers understand this market better than sellers do. And that's a huge shift, because over the past 2 years, buyers were the ones getting burned. They were the ones losing bidding wars, overpaying, waiving inspections. So they adapted. They paid attention. They studied the market. They learned how this game works. And now, they're finally starting to see the environment change. Inventory is rising. Listings are sitting longer. Price cuts are becoming more common. And when buyers see that happen over and over again, something clicks. They realize, wait a minute, I actually have leverage now. That's a completely different mindset from just a couple of years ago. Back then, buyers were desperate. They had to act fast, make aggressive offers, compete with everyone else. But today, that urgency is gone. Now, buyers are slower, more patient, and far more selective. If a home sits on the market without showings, buyers notice. If a listing has multiple price cuts, buyers notice. If something feels even slightly off, buyers walk away. And this is where sellers run into trouble, because many of them are still using the old playbook. List high, wait for offers, create artificial urgency.
But that strategy doesn't work anymore. Buyers are not fooled. Today, anyone can go online and check price history, previous listings, how long a property has been sitting. Everything is transparent. So when a seller tries to relist a property to make it look new, buyers already know. When a price is too high, buyers don't negotiate. They just ignore it. And that's the worst thing that can happen to a listing. Because in this market, silence is a signal. No showings means no interest. No interest means one thing: the price is wrong. And once a home sits long enough, it starts to lose momentum completely. At that point, even a price cut might not be enough to fix it, because now the listing looks stale, and buyers start asking, what's wrong with this house? This is why the balance of power is quietly shifting, not through some dramatic crash, but through behavior. Buyers are waiting, sellers are chasing, and that dynamic changes everything. And the data is now starting to confirm everything we just talked about.
The spring market is already failing. This is supposed to be the strongest time of the year for housing. Spring is when activity picks up. Buyers come back, homes start moving. But that's not what's happening in 2026. In fact, the latest data shows that existing home sales just dropped 3.6% month-over-month in March. And that's a big deal, because March is the beginning of the spring housing season. So if sales are already declining at the start, what does that say about the rest of the season? And it gets worse. Sales didn't just fall in one area. They fell in all 4 major regions of the United States. The Northeast, down 8.5%. The Midwest, down 4.2%. The South, down 3.1%. The West, down 1.3%. Even the markets that were considered strong are now slowing down. That completely breaks the narrative that certain regions are immune, because they're not. And when you zoom out, the bigger picture becomes even clearer. The last 3 years have already been some of the weakest housing markets on record in terms of total sales, going all the way back to the early 1990s. And 2026? It's on track to continue that trend. Now, here's where things get really interesting. At the same time that sales are falling, inventory is rising. There are now about 1.36 million homes on the market. That's up both month over month and year over year.
So let's break that down. More homes for sale, but fewer people buying. That imbalance puts pressure on prices. But if you look at the headlines, you might still see that home prices are increasing. For example, median home prices are up about 1.4% compared to last year. Sounds like the market is still strong, right? Not exactly, because that number is misleading. A lot of that price increase is coming from high-end transactions, homes selling for $800,000, $1 million, even $3 million. And when more expensive homes make up a larger share of sales, they push the median price higher, even if typical homes are not actually gaining value. So what's really happening underneath the surface is this. In many areas, prices are flat or even declining. And here's the proof. Housing affordability is actually improving. That means buyers, on average, are finding it slightly easier to afford homes compared to a year ago. And that only happens when incomes rise, or prices soften, or both. So despite what the headlines say, conditions are slowly shifting in favor of buyers. And when you combine all of this together, falling sales, rising inventory, and misleading price data, you start to see the real picture. This is not a strong housing market. It's a slow one. And slow markets are where things begin to break. But what's happening behind the scenes might be even more important than the sales data.
The hidden risk, the HELOC trap. Over the past couple of years, a lot of homeowners have been relying on one thing to stay afloat: their home equity. As the cost of living kept rising, people needed extra cash. And instead of refinancing at higher rates, they turned to HELOCs, home equity lines of credit. In fact, HELOC usage jumped about 16% year over year. And it makes sense. A HELOC lets you keep your low mortgage rate while borrowing against the value of your home. So for many people, it became an emergency fund, a renovation fund, even a way to consolidate debt. But here's the problem. That strategy only works in a stable or rising housing market. And that's starting to change, because now lenders are getting nervous. They're seeing mortgage delinquencies tick up. They're seeing home prices soften in many areas, so they're starting to protect themselves. And the way they're doing it is quietly changing the rules. In the past, a HELOC worked like a credit card. You could borrow only when you needed the money. But now, many lenders are requiring borrowers to take out 50% to 100% of the loan up front. That's a huge shift, because it means you start paying interest immediately, even if you don't need the money yet. It turns a flexible safety net into a fixed, risky loan. And that's just the beginning. Here's what most people don't realize. Your HELOC can be frozen or reduced at any time, especially if home values start to fall. This isn't theoretical. It already happened back in 2008. Banks simply cut off access to credit overnight. Imagine relying on your home equity as your backup plan, and suddenly it's gone. Worse, in some cases, lenders can even demand repayment. And if you can't pay, you may be forced to sell your home, even if you weren't planning to. That's why this shift in HELOC structure matters so much, because it adds pressure to a market that's already slowing down. More debt, more risk, less flexibility. And when you combine that with falling sales and rising inventory, you start to see how fragile this situation really is. Because the housing market isn't just about buying and selling homes. It's also about how people finance their lives. And right now, that foundation is starting to crack. So when you put all of this together, a very clear picture starts to form. What happens next? The housing market isn't crashing overnight, but it is shifting fast. And the biggest shift is this: sellers are slowly being forced to adjust. After years of holding the power, they're now having to face a very different reality. If they want to sell, they need to price correctly from day one. Because in this market, overpricing doesn't just slow things down, it can completely kill the deal. And we're going to see more of that. More price cuts, more listings sitting, more sellers chasing the market down, not because they want to, but because they have to. At the same time, buyers are gaining something they haven't had in years: options. More inventory means more choice. More choice means more leverage. And that changes behavior. Buyers are no longer rushing. They're negotiating. They're waiting. They're being selective. And that's exactly what creates a more balanced market. Not a crash, not a boom, but a reset. Now here's the important part. This shift doesn't mean sellers lose. A lot of homeowners are still sitting on significant equity. Even if they reduce their price by 10 to 15%, they can still walk away with a solid profit. But it does mean one thing: the easy money phase is over. You can't just list your home and expect the market to do the work for you. And for buyers, this is the best environment we've seen in years. Is it perfect? No, rates are still high, affordability is still a challenge, but compared to the chaos of the last few years, this is a completely different game, and conditions are still slowly improving. So moving forward, the key question isn't, will the market crash? It's this: how fast will sellers adapt before the market forces them to? Because the longer they wait, the more it's going to cost them.
The housing market isn't broken, but it's no longer what it used to be. If you're a buyer, your window is finally starting to open. If you're a seller, pricing correctly isn't optional anymore. It's everything. If you found this breakdown helpful, hit the like button, subscribe, comment your opinion. It really helps the channel. And if you want to understand what happens next in this market, check out the next video on your screen right now.